Robert Kiyosaki, Bitcoin, gold, silver to soar as Fed cuts rates. Bitcoin Fed rate cut. Robert Kiyosaki predicts that Bitcoin, gold, and silver prices will soar as the Federal Reserve cuts interest rates, urging investors to shift from fake assets like U.S. bonds to real assets before it's too late. Last updated September 19, 2024 at 15:13 GMT 3. Journalist Hassan Shittu about author Hassan, cryptonews.com. Journalist with 6+ years of experience in Web3 journalism brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied, last updated September 19th, 2024 at 15:13 GMT 3. Why Trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. Renowned financial author Robert Kiyosaki, famous for his best-selling book, Rich Dad, Poor Dad, has once again made waves in the investment world with his bold predictions. In a recent post on X, formerly Twitter, Kiyosaki forecasted that Bitcoin, gold, and silver prices are set to soar as the Fed pivots and cuts interest rates. According to Kiyosaki, investors need to shift from fake assets like U.S. bonds and focus on acquiring real assets such as Bitcoin, precious metals, and real estate before the rate cuts occur. He warned that those who continue debating over the superiority of gold versus Bitcoin will miss out on significant gains. Prepare for an explosion in Bitcoin price, Kiyosaki advised investors. In his post, Kiyosaki emphasized that the Federal Reserve's recent rate cuts will trigger a massive shift away from traditional fake assets like U.S. bonds. He argued that the decline in interest rates will result in investors fleeing these assets and moving towards more tangible investments such as real estate, gold, silver, and Bitcoin. Kiyosaki's statements resonate with his long-standing views that assets backed by fiat currency, especially U.S. bonds, are vulnerable to inflation and devaluation. Kiyosaki wrote, Bitcoin, gold, silver prices are about to explode. He clarified that the Fed pivot will catalyze significant price increases across these real assets. He dismissed ongoing debates about whether gold or Bitcoin is the superior investment, describing those involved in such discussions as talkers and cowards who will inevitably suffer losses once the Fed makes its move. Comparing the debate over gold versus Bitcoin to a conversation about choosing between Ferraris and Lamborghinis while one takes the bus, Kiyosaki's message was clear: action, not discussion, is the key to capitalizing on the impending rate cuts. He urged his followers to stop debating and start buying real assets before it's too late, stating, please stop talking to yourself and ask yourself, how many gold and silver coins and Bitcoins do I own? Evidently, Bitcoin has risen by over 4% following the rate cut. Inflation and the Fed, why Kiyosaki believes real assets will surge. Kiyosaki's predictions are rooted in interest rate movements and his concerns about rising inflation and its effect on the economy. According to him, inflation, driven by the Federal Reserve's monetary policies, erodes the savings of many Americans, particularly retirees. Kiyosaki shared a personal conversation with a friend, a baby boomer, who lamented that inflation had eaten away their 401k, leaving many retirees unable to sustain their lifestyles on their savings alone. He attributed the struggles faced by retirees to the Federal Reserve's practice of printing money, explaining that the more money printed, the more prices rise for essentials like food, housing, and fuel. Kiyosaki's broader critique extends to the entire monetary system, which he believes disproportionately benefits the rich while leaving the poor and middle class further behind. Kiyosaki emphasized saying, when Fed prints money, the rich get richer, poor and middle class grow poorer. He believed that inflation and the Fed's policies were to blame for the growing disparity between the wealthy and the working class. As he sees it, those unprepared for the Fed's pivot will face significant financial challenges, while those who invest in real assets will prevail. For Kiyosaki, this is a moment where fake assets like US bonds will lose value, and real assets will become the foundation of wealth creation. Follow us on Google News.